Welcome to the Australian Business Executive Podcast, where we speak with Australia's most influential industry professionals on the business and economic development issues taking place across the country. You can stay up to date with all our content, including our magazines, podcasts and videos by visiting www.theabe.com.au and clicking on subscribe.
Dr. Manny Pohl has more than 30 years of extensive experience in funds management and is currently chairman and CIO of acclaimed investment house ECP Asset Management, which he founded in January of 2014. He has served on the boards of several major corporations, universities, and professional bodies, and has also been heavily involved in the community sector, particularly with sport, health, environment, and philanthropic arts organizations. Manny, thank you for joining us today.
Oh, it's my pleasure, and thanks for including me in your program.
Firstly, you were recognized in this year's Queen's Birthday Honours List for significant service to the finance sector and to the community. Congratulations. Tell us a little bit about that.
Well, I have to say I was really surprised when I got the email from the Governor General's office. They kind of like, what the letter says is that you've been nominated, and then you go to a panel and the Governor General to actually decide whether you're worthy of it. So you sort of left hanging for a couple of weeks while they make up their mind whether you're worthy. And I think if anybody had a heart condition, it would certainly cause some problem at that space. But I then got the notification, and I happened to be in Singapore at the time, and all of these messages started hitting my phone. So it was really a wonderful moment for me, and certainly not expected.
Excellent. This is quite a prestigious honor, which is awarded for a culmination of work over a long period of time. You were an immigrant to this country, like myself, you can tell by my accent. So tell us about coming to Australia and the career that you've had here.
I arrived 25 years ago, and I'm not sure when you arrived, but I think probably not quite 25 years ago. And I came from a firm in South Africa, which is now Merrill Lynch. So I was a partner in what was called Davis Borkham Hare. I arrived here and joined Wilson HTM because the chairman at the time, Stephen Wilson, had spent some time in London working at a firm called Cazenove. And Cazenove and my old firm in South Africa were the only brokers to Anglo-American and De Beers, and we did a lot of work together. So I had an idea of how to manage portfolios because in Australia, the industry was really dominated by the banks with unit trusts. And he was clearly looking to diversify his business, and he came in contact with me, and we decided to set up what was then called Hyperion. I built Hyperion up over the years and then sold my stake and then formed what is now ECP and ECP Asset Management some 5 years ago. So it's been a wonderful run. Australia has been really good to me, and as we heard about the AM, that was just an amazing accolade. But built up two funds management businesses, both highly recognized, and certainly ECP is firing on all cylinders at the moment.
And ECP or ECP is the holding company for four different businesses. We're primarily here today to talk about the ECP Asset Management business in institutional funds management for sophisticated investors. So why don't we start there?
Sure. As I said, it was started 5 years ago. My son Jared and I set it up together, and we started obviously making the rounds and presenting our credentials to institutional investors. They clearly had known me for my time at Hyperion and the good work we did for them there, so it was a lot easier than the first time round. But we did a couple of things differently with a different investment approach, which I'm sure we'll get into. But right now we've gone from a standing start 5 years ago to having $2.5 billion of committed funds for us to manage, which is an amazing feat, and thanks to the team that I've got around me. But yeah, I'm really happy with the progress we've made. Okay.
And so what makes the philosophy of ECP Asset Management different from what already exists in the market?
So, I mean, there is obviously one other player that's similar to us, but the investment philosophy, and we've coined the term redefining active investing, because I think along with the rise of index tracking funds and that whole industry, I think active investors have started to lose their way a bit, particularly those that come from a stock picking background like I do. In terms of ECP Asset Management, we sort of say that there's three legs that you have to the business. One is that you have to do forensic research, and these days, with the slim margins that investment houses work on, a lot of the research capability that they used to have has been pared back. So research is done, but not at the forensic level, and I think that's where we clearly have a difference in terms of our investment philosophy. A lot of stocks that come to the market and some of the performance are all rated on future performance. And I think the difference, again, in our philosophy is that we always look at the track record. We look at the results that a management team have achieved. We look at their tenure at the business. And if we like the business model, then we start to look at the potential. So we consider both the potential and the performance over the past 3 to 5 years. And then we have small concentrated portfolios. So we kind of put all, we don't bet on everything, but we certainly bet on the ones that we like. And then alignment of interest within our team. I've got a couple of my sons in the business with me, and we insist that all the guys in the business put their money into the same portfolios that the clients have got. So there's total alignment of interest, and that is what I think creates a really successful fund management business.
Okay. And, generally the theory is to have senior people looking after the portfolios, but you've done something different, and your main selling point is to build younger teams. Is that correct?
Yeah, that's right. I mean, over the years and when I've started both businesses, obviously key man risk is something that asset consultants and research houses focus in on. And in a fund management business that's focused on one person, that's quite difficult. And so you might hire people of different age groups, different demographics to try and get around that. But the only real way that you can get around that is to obviously have a philosophy of what you do, and then have an approach that everybody follows. Now, it's not to dictate the things that you're going to invest in, but maybe adopt the academic approach where you test an investment thesis, and if companies don't live up to that testing, then they fall by the wayside. So if you've got a process that everybody can follow and everybody consistently follows it, then you get around this key person risk problem, key man risk. So we've got systems and processes in place, which I did at the previous business and obviously here at ECP. So that gets us around it. But then the question is, the people that you hire to follow these processes and procedures, do you go with the age demographics, or, like we've done now, go and pick a group of really young men, get their buy-in into the process and what it delivers, and then you get not only the vision of young people, which is very different to some of the older people, particularly in corporate governance and issues like that, and how one has to deal with the environment and other communities. So you get these young people in who not only have that as the starting point, but also have agile minds and understand the modern technology and understand what's going on, as opposed to older people who more sit in their ways. So I've taken a group of young guys, put them within the framework that we run, and allowed them to follow the process, and the results speak for themselves. So, yeah, it's a very different approach where I think we've got a young team who are going to be around for 20, 25, 30 years working together, and I certainly think over that period they're going to be one of the preeminent firms in Australia.
Let's talk about the results that you're getting with this tactic of hiring and developing younger talent.
Yeah, well, I mean, if you go and look at any of the research houses, and one that's easily available is Morningstar, who have an Australian institutional sector survey, and Mercer have got a database that one can refer to if you have access to that. But in those surveys, they obviously take the data from a whole lot of managers, and in the case of Morningstar, they use 64 managers in their survey. And over the past year, and that's the year to April, and I know, data, statistics, lies and damn lies are all in the same bucket. But if you take their Morningstar survey and you look over 1 year, ECP Asset Management over all 64 was number one. Over 3 years, our business is fifth. Over 5 years, it's sixth. And over 10 years, we've got a 3-year track record. And you might say, well, how do you have a 10-year track record when ECP has only been managing money for 5 years? But within the ECP stable, and we'll obviously lead into that, is Flagships, which is a listed investment company. which Jared and I have been managing the investments for 20 odd years now, since 1998. And that's got a longer term track record. But over those 10 years, we're third out of 64 managers. And just to put a number to it, the long-term return has been around 12.5%, whereas the market has only done about 8%.
One of the other things I remember as well with this, when you're talking about bringing on a younger staff, there were some other, areas where you thought that was quite different. So in addition to the returns, I remember you talking about areas, assisting the community in the way that young people are perhaps more global in their thinking these days. Can you talk a little bit about that as well?
Well, yes, and that brings me back to the opening question that you asked me, which was about the AM. So I think also what's different in our business is that we insist that all of the senior members of our team, and that's all the investment guys, make a contribution to a non-for-profit usually in some official role, be it like secretary or treasurer or something. And if that takes them away from the office for a couple of hours, that's accepted. So we insist that everybody is involved in the community in some way. We participate in the sleep outs and cooking for the homeless once a year, those kind of things. We support the Currumbin Wildlife Hospital with not only time, but also it's not tithe because that's got a religious connotation, but 8% of our profit goes into what's called the Pohl Foundation, and that Pohl Foundation hands out money to like the New South Wales Art Gallery, to Currumbin Wildlife Hospital, and there's a whole lot of them. There's another one, I can't think, the name escapes me at this point in time, but they're all community-based. And the younger people, they believe in that kind of approach, maybe a little more so than what the older generation do. So they all have bought into that. They're all keenly contributing in their own time, and then the firm contributes with money as well.
Excellent. Now, ECP Asset Management is unlisted, but you have 3 other companies which are listed on the ASX, allowing retail investors to access the business and your investment philosophy. Do you want to run us through those?
Yeah, so as I mentioned a few minutes ago, Flagship Investments is one. There's 3, as you said: Flagship Investment, Barrack Street, and Global Masters. Flagship Investments actually just represents a standard portfolio for us in the institutional space, and that's where retail investors can obviously get access to our management style and our results, and that's got a 50 million market cap, and there's a lot of global people, international people that invest in that. Barrack Street is like a subset or a subcomponent. So Flagship's, its mandate is to invest across the board in Australian equities. Barrack Street focuses on only investments that are outside the 50. So it's what we would call an X50 product. So that means things like BHP, Rio, Woodside Petroleum, News Corp are not eligible to be in that portfolio. So it's focused on small to mid-cap stocks on the stock exchange. Global Masters was set up in the days when to get into Warren Buffett's company, Berkshire Hathaway, was a hugely expensive exercise because a share cost sort of hundreds of thousands of dollars, and the average person couldn't do that. So we set up a company which allowed people for $1 to get an exposure to Berkshire Hathaway. I mean, since then they've obviously issued the B shares, and it's a lot easier. But it's been around for a while, and essentially its major investment is in Berkshire Hathaway, and that's still going, and it gives our family office and friends the ability to get access to who's one of the smartest investors on the planet.
Excellent. Okay. Look, we're starting to wind down. What are your goals for your companies when you think about the future?
Oh, look, I think clearly we want to be recognized as one of the preeminent firms in Australia, but that goes not only to investment performance, but also the ethics of the business and how we conduct ourselves. And I've always said that fund managers, they have nothing to offer people other than their reputation, and their reputation would cover both of those things. So we would want to be seen as a firm that's very involved in the community, put something back into the community, and when they invest your money, you know that it's going to be invested in a way that I've always referred to, and you'll see it if you go to our website, where I say that it's better to sleep well than to eat well. Now, that doesn't mean to say that we don't want to perform and generate wealth for our clients, but it does mean that we're very particular about businesses and investments, and also about what we do in the community to ensure that it actually rings the right bells.
Excellent. And before we finish today, is there anything else that you'd like to mention to our listeners and eventually our readers out of this?
Well, other than if you find the broadcast interesting and you think that we're an interesting firm, feel free to go to our website, and you can contact us through the website, www.ecpam.com. And we'd love to talk to you. And if you have got a few dollars, speak to your broker and buy our listed investment companies, Flagships or Barrack Street or Global Masters.
Manny, thanks for your time today.
Oh, it's been a pleasure, and thanks for your time and for your effort into this program.
This has been a production of the Australian Business Executive, a division of Romulus Rising Proprietary Limited. All rights reserved. You can stay up to date with the Australian Business Executive, including our magazines, podcasts and videos, by visiting www.theabe.com.au and clicking on subscribe.